Hello traders, Gary Wagner here, just about 10:40 in Honolulu, 3:40 in New York. About 20 minutes left in trading, and the Dow Jones Industrial Average is back under pressure. This is Trending Markets for Monday, January 25th, 2016. We are looking at the Dow Jones Average now again below, substantially below 16,000, trading at 15,892, off about 200 points on the day. The low is 15,888. We are at 892, so we're a couple of ticks, literally, off of the low on the day. Substantial pressure being placed on the markets. We're talking about a global event that's happening right now, especially with crude oil. If we take a look at crude oil, which was up about 8% just on Friday, it has given back the predominant portion of that gain that we saw on Friday, with oil back under pressure, off $2 a barrel, off 6.34%, trading at $30.15 per barrel. So traders, I want to start today's show really by looking at the Standard & Poor's. We talked about the fact on Friday that if we had any kind of follow through whatsoever, and the key number that we were really looking for was about 1900 in the Standard & Poor's. This, of course, is the E-mini. E-mini well below that, down 30 points approximately. 1870 approximately, and that is really the differential between it trading at 1900 and it trading at its current area. When we look at our daily chart, we identified the potential because we saw in terms of the marketplace itself that we had a couple of solid up days. That would be Friday, this solid up day right here, of course Thursday here. On Wednesday of last week, that is when we had an intraday low that actually defined this sell-off, because what defined the sell-off more than anything else was the fact that on an intraday basis, we actually saw market price point breach the particular level of about 1830, but that was to be very, very short-lived. You had some incredible short covering coming into the market, and you had the market closing well above 1830, closing roughly, call it about 1855 in that area. The next day we had a small 10-point rise, and then of course we had a triple-digit gain in the Dow Jones Industrial Average on Friday, along with a very, very sizable gain in the Standard & Poor's. That is this particular candle here. Now, we also identified current resistance at 1900. And as you can see, this market did not have the ability to take that particular price point out. We now have effectively a dark cloud cover, although the one criteria that it does not meet is that for a real dark cloud cover, it has to come after an extended or protracted defined uptrend, such as you get right here. This is actually a dark cloud cover. If it closes below the open of the prior candle, then what you're looking at is an engulfing bearish. I'm speaking about this particular area here. This is an engulfing bearish right in here, in which it opens at the close of the prior day and closes below the open. Here is a dark cloud cover right in here, and your confirmation comes just following that. And this is not that much of a protracted rally, but it is a rally nonetheless. So the fact is that we're trading when you get buy signals and sell signals. And what I mean by that is when you get variations off a three-river morning star, which could be a pivotal reversal to the upside, followed by a dark cloud cover. What that tells you is that you've got a market that is in a tightly congested range. It cannot break out of the resistance from the upside, which is absolutely at this point at 1900, and at the same time it has found some relative support down near these lows. So what can we make of this? Well, we'll have to see how this unfolds. Obviously, moves above certain areas, meaning 1900 on a closing basis, that to me would be extremely bullish. Moves within this area and not below 1830 would tell me that we could be entering a sideways or a congestive market trading between a narrowly defined range. I don't think we're going to see that. I think we're either going to see it break above, which seems less likely on a down day, or threaten these lows that come in at around 1830, 1831. So traders, as you know, I am on record believing and predicting, forecasting that we could see oil drift as low as about $25 per barrel. We certainly got close to that on Friday. This is a weekly chart, so this red candle represents the activity of today, but this candle will continue to form throughout the week, so it could end up being green, it could end up staying red, but this is really the mark that we want to see, which is $25 per barrel. Because as we've said, and to really illustrate this, we really need to compress this chart. But as we've said, we have a historical precedence and really a series of lows that came in when this market last reached this area. Of course, to find a price point or a time, you've got to go back to 2002 and 2003. But when you do, you get a series of bottoms that come in at around $25 per barrel. And now that's after breaking and trading below, of course, $20 per barrel and then moving back up. So it trades to 20, moves back up, and you get this strong level of price support. You can absolutely see this on a technical basis as the market had number of occasions in which it traded above, but as it traded under pressure, it found some sort of support roughly at $25. Now, we don't have enough data points to see if that particular price point will hold, but my sense is that if we can't hold 25, we're obviously going to head to 20, but 25 is still a logical place that we could find some support in oil. This has been Gary Wagner for Trending Markets. Talk to you tomorrow for another daily update and review. Bye-bye.